in, take over. Hey, Jamie and Steve, what's going on today?
Thank you very much, Scott. Hello, everybody. Steve, hello to you, my friend. How are things on your side of the country?
Just fine and dandy. First day, well, second day of spring.
Indeed, it is. Saturday was the first day, if I'm not mistaken, which was also somebody's birthday.
Yes, spent the day on the couch with stomach flu. It was lovely.
I'm sorry to hear that. It happens from time to time.
Great irony.
Yes, yes. Okay, well, welcome everybody. Today is March 22nd. Welcome to another edition of the Office Hours. I'll be your host, and of course, got my trusty wingman Steve in here as well. Before we get rolling, just a little bit about the disclaimer here. Just want to make sure everyone in attendance is aware of the fact that everything we share with you in these webinars is for educational purposes only. Meaning, if you do need investment advice, what to buy, when to sell it, all that good stuff, please do yourself a favor. Seek out a registered investment advisor or someone like a Series 7 licensed stockbroker that is legally allowed to dispense that type of information to you. Once again, everything we share with you is for educational purposes only. Okay, always like to take a little bit of time here at the top of the hour for the new people. Let everybody know about the community that we've built around the tech that is TI Pro. The trading room hosted by Barry Anderson. Great place to be. If you've shopped around for trading rooms on the web, you know that most of them that are worth anything are not free. We're the anomaly there. You get access to the trading room with Barry for free. Barry opens the doors about 30 minutes before every open, and you've got all skill levels of traders in there from beginning to intermediate to advanced. So take advantage of that resource because it's free and it's a great place to learn and hang out and hear what other traders are trading, as well as Barry does a fantastic job at showcasing the way that he uses the technology and likes to answer questions as well. So get on in there. Office hours, of course, is today with myself and Steve for the 5 p.m. Eastern webinar slots. Steve's going to take the steering wheel tomorrow for the trade of the week. Andy Linlof's going to ride shotgun with him. Changed it up just a little bit on Wednesdays, good old hump day. We bring in Dan Merkin, our CEO and founder, along with our Chief Technical Officer, Brad Williams, typically giving you a peek at new features coming down the pipeline, but it's always entertaining with those two. Andy's going to round out the 5 p.m. Eastern webinar slots with the Trading Studio, and I'm going to ride shotgun with him. And of course, we have our ever popular daily support session, Monday through Friday, every day, starting at 12 p.m. and going into 1 p.m. Eastern. So on the next slide here, you will see how to get to that support webinar. Just down here at the bottom left-hand corner, trade-ideas.com/live. That's a static address right to the YouTube channel. So once you bookmark it, it's easy just to click and get back there each and every day, 12 p.m. to 1 p.m. Eastern, where you can get any type of question answered, whether it's a simple configuration issue, maybe some back testing questions, maybe it's a brokerage plus question. So anything is fair game during the daily support session. So come one, come all. In addition to that, as far as educational resources go, we've got the TI University. It's a 4-part video series, 101 through 401. Especially if you're new to the product, this will definitely help you get over that learning curve quicker than later. All right, so lots of good stuff in these tutorial videos, along with our 20 lessons in 20 days, which is available in our education section on our website. So if you're brand new, watch these guys, watch the 20 lessons in 20 days, and you'll be cooking with hot grease in no time. All right, here we are to today's agenda. A little bit of a gap up today. And Steve, one thing seems to be remaining constant. It seems ever since the V bottom that we put in about a year ago, things are starting to get a little bit more difficult on the longer time frames.
Yeah.
I've also, from all the people that we hold in high regard on Twitter, they've also been saying this for, probably a couple of weeks now, that things are starting to get a little bit more difficult. In other words, we're getting back into a normal type of market environment. And of course, those people are talking about, don't get too cocky, everybody's done well. over the past year, because we've just had a market that's pretty much been going straight up with a few pullbacks here and there. So having said that, I guess I'll kick it over to you and we can take a look at some of those larger tracking ETFs. Give me 1 second here.
Yeah, you know, I was just zooming out. Welcome to my screen, by the way.
All right.
And looking at, you know, we hit a low down here a year ago, around 216. I just looked, and you know, 200, call it roughly 200, and we're trying to tap on 400 up here. I mean, who would have thought that down here a year ago, in the midst of that panic and fear and anxiety everybody was going through, that you could say, hey, just buy the market. It's going to almost double, almost going to double. Who would have seen that coming? So the point is, I'm starting there to say, yes, we have come a long way. And when we start to come a long way, just like people want to climb Mount Everest, they need to build base camps from time to time. You can see we've tried to build a couple base camps, but you know, at some point the air does get a little thin. And there are some really weird, I shouldn't say weird, there are some historical tells that are out there. You know, when your Uber driver starts telling you how many points they made in Tesla or, you know, GameStop. When everybody's attention is on the market, those are kind of historically times to be cautious. I'm not saying be cautious now, but I'm just saying remember that markets don't always go up. They were literally, there was a song in the 20s, I can't recall, it was an old silly song, you could probably look it up on YouTube, where people were so happy with the 1929 market. Everybody was making money, everybody was in the market, and you were whistling these songs, and and that was it. That's almost like time stamping the magazine covers. That's also kind of a curse. There's just a lot of weird things going on out there. The market is rotating. It's attempting to rotate, and that is a healthy thing. Getting away from technology. Speaking of, we look at technology, the giant behemoth move, almost double. You know, it's more than what the S&P did. 169, 170. Yeah, just about a double there in the Nasdaq. More than a double. So it's been an interesting year, and it has been difficult. Some of the trades are just not working out. We see the indexes go higher, but literally some of us would go, why are my 5 swing trades all red today? The market's up, you know, what the hell? It's just odd. You know, last week's trade of the week started off great, but couldn't get out of its own way. It's, you know, 3 steps forward, 2.5 steps back, chugging along. I've got some choice words tomorrow. We'll see what happens with the trade of the week, which, by the way, is not official. It did not fire. Trade of the week did not take out Friday's high, and so thankfully the trading gods were nice. They didn't trigger the trade and then do whatever it was that happened today. But I've got some thoughts on how to manage a trade that didn't trigger, and we might want to watch and see what happens, but that's for tomorrow. Back to today, we're simply just talking about the continued trend. You know, this is kind of what it looked like last week when I last left you guys. I think even on my Tuesday webinar, I said, you know, some good sideways chopping and backing and filling would be healthy. And we kind of got that, pretty good deep pullback on Friday. And then the market was back to buying mode back in the afternoon on Friday, and some good follow through today. I will show you this though. You've seen me talk about that 5-day rolling average that I use on my 15-minute chart, okay, which is essentially just taking 100, there it is right there, SMA 130. If you take 130 as your value, as your period, on a 15-minute chart, you're going to get a 5-day moving average, looking at it through the prism or the lens of a 15-minute chart. And look at what starts to show up. I only use this because it becomes an area of interest, or I'm associating it with an area of interest. There's nothing that really says black or white what you have to do when the stock gets there, but just observe the price action as it is a level of interest. It was a level of support last Friday, and then it broke, Thursday, and then it broke that Thursday, got all the way back to, and guess where we found sellers today? Just interestingly enough, at the 130. So that's one of the reasons I use that on my 15-minute chart. Just to note, like, hey, if I was long some stuff, hey, I might want to start taking some profits right here, because this is likely where the sellers are going to pop in. You know, that's the way in which you want to use these types of indicators, not to tell you what to do all the time, but just know that, hey, there's a level of interest coming up and you might want to make a decision. Over on the Nasdaq, a little different. I noticed on the daily chart on the Nasdaq, the Qs that is, we still can't quite get above the 50-day moving average. whereas over in the S&P, we're well above the moving average of the 50, which again just kind of exemplifies the rotation that we've had into out of tech and into some other names, more broadly based value plays that are going to keep the S&P up. I did this with Andy last week, and it's worth doing it again. If you want to play with indicators, if we add an RSI here, this is also kind of in the back of my mind as to what markets do after a long extended run and they start to get a little tired. Again, one of the things we saw was the market indexes go up, but my 5 stocks don't want to go up. There's a bit more weight in those. But when we look at the S&P RSI, notice the declining peaks here in our momentum indicator, our oscillator. Each new high, and this is associated with a new high in price, is also corresponding with a lower high in our RSI. This is what smart technicians taught me a long time ago. They call bearish divergence, negative divergence. You've got to be careful of that. It doesn't mean get short, but it means you might not want to be leveraged to the gills right now on full margin, looking for those moves we had back in November and December. They're not out there right now. So I'll just leave you guys with that.
Hey, Steve, real quick here. Do you have pre and post active on your daily? There was a question regarding that.
I can look. Hang on one second. Let's see here. I want to remove that. There we go.
I said you didn't, but I could be wrong.
If I go to, okay, I do have pre and post enabled. All right, but
okay.
That doesn't really show anything on the daily chart. It's going to be significant only in a 15-minute chart.
Well, yeah, I guess if you deactivate those, do we see any change?
A
little experiment real quick.
As soon as I unfreeze my, there we go, unfreeze that one and uncheck that one. Okay, so if I do that on my daily chart, it doesn't affect anything else. Is that what we're looking at, or?
Yeah, I was just curious.
Yeah, I don't know why I would have had those enabled, because obviously we do that and they show up in the intraday stuff.
Right, we'd see it on the intraday pretty clearly, but I just wanted to make double sure there.
Yeah, hopefully that visual answers the questions.
Yeah, okay. Thank you.
All right, that's all I got.
Very good stuff, Steve.
Oh, I have not tried that yet, Dave. I'll do that while Jamie's speaking. I'll play around with that. Thanks for reminding me about that.
Talking about the Dave, 130.
Yeah, you take 130 and double it, like you'd have a 10-day moving average, where you can view that 10-day average on your 15-minute chart using a 260 period. Interesting.
10-4. Okay, let me grab it back here. All right. Should be good to go here. Okay, so I'm going to jump around a little bit here. We'll talk about Holley here in just a moment. Pretty tame day for Holley, just with 5 signals. A little bit of profit in there. And then I've got a new window for you guys, a new top list, along with an alert window to go along with it. But we're going to talk about the price alerts from last week, okay? Because they were all rotation plays. And as Steve was pointing out, and as we were just talking about, it's just kind of hit or miss right now. And I tell you, I have not seen such a bloodbath in price alerts. Now keep in mind, these longs right here were all the ones from last Monday. So we had 10, all fired except 1. And look, not one winner on the list as of today. Now, as of Thursday, things were looking pretty rosy. On about 8 executions, or not executions, but 8 triggered price alerts. We were in the money nicely. I think somewhere between 8 and 10 points. Everything was hunky-dory. But that was before the day had concluded, and that was this day right here, okay? So things went south pretty quickly here. Now, so the longs in that rotation and those rotation alerts aren't doing too well. Now, Andy's webinar came along on Thursday, and we typically do a little price alert contest in Andy's webinar, and you can see all the price alerts that everybody did on Thursday were shorts, and look what we got here, okay? On the ones that have triggered, they're not doing too well either. So these long swing trades signals aren't doing too well on the rotation, and then we have the same thing showing on the shorts that everybody kicked out. So that tells us something. Things are getting more difficult. Which ones are going to follow through? Which ones are not going to follow through? It's pretty hit and miss right now. So that tells us, you know what? We better be extra agile, extra nimble, manage that risk, maybe only do half lots, because that's what this is telling us. It doesn't matter if it's long or short right now, it's just getting more difficult to get those long periods of time where you stay in the money. Now, having said that, look at the small cap plays today. Notice that my Turbo Family Up window, let me just show you which one I'm talking about here, which is these stocks that are hitting all-time highs. If we scroll through this list here, we're still seeing the same sectors: manufacturing, retail, finance, insurance. It's the same old sector. It's just that some are staying up, some are backing off, so the market is just getting tougher. AMTX, one that got off to a pretty good start today, right here, stayed pretty strong, but is started to get weak heading into the close. So just kind of going with the same theme that we've been talking about since we started earlier. You know, we're at that top. Things are starting to get a little bit more, or I won't say a little bit more difficult, but things are just starting to get more difficult to predict. And after the long year that we've had with all the tribulations, yeah, it's not that surprising. So expect more chop as we move along sideways here. Anything is possible at this point in time. All right, I see questions popping in here. Let me know if I need to go over anything, Steve. Looks like you're knocking them out pretty good. So just want to give everybody a glance, because typically price alerts do pretty well, whether they're mine. We have some winners on the board, or, you know, Andy's contest, we're going to have some winners on the board, but, you know, not the case thus far. Things may change as the week progresses, but it's definitely telling us something. All right, let me get my cheat sheet back over here. Let's go ahead and knock out the Holley recap. I will tell you this, in keeping in tradition here with things that typically mean something but don't mean something, stocks that are typically going up that are backing off, and vice versa. Check out my compare count window this morning. We had a pretty bearish count, 56%. And by the way, all I do is I check on this compare count window after the first 15 minutes, and many times, but not all the time, it can give us a little peek and tell us where the market might be going for the remainder of the day, whether it's immediate or by the close. So one more thing that, you know, typically means something that really didn't mean a whole lot today. We had a 56% bearish count, and typically that would indicate a move lower, but here's the first 15-minute candle. What did we do for most of the day? It's just a slow grind up, gave back a little bit in the last 45 minutes, but just another one of my favorite indicators that, you know, fired a miss today. So, you know, just keeping in the same vein of things that, well, market's getting harder, things that typically are pretty accurate are not being so accurate right now. So just another example of the market getting a little wishy-washy up here. All right, now let's talk about Holley. Rather tame day, 5 signals only. Not a whole lot of conservative and moderate spread. We had just a teeny bit in the Snx trade, so let's take a look at that one. Snx, okay, here we go. It was a long. Holley called it out right here at this level right here. At a price of 108.03, a little bit higher price stock than normal. Conservative exit yielding only $33.36. And just keep in mind, all the values that you're seeing on my screen here on my AI blotter are based on risking $100 per trade, not like what you see over here on the channel bar, which is assuming 100 shares per trade. So we're risking $100 per trade in this setup here. And Holley closes the trade out with a profit save. Notice the shaded box here. Okay, that is the time that Holley is spent in the trade in conservative mode. Closing the trade somewhere right in this candle right here on a profit save. Probably that red candle spooked it out a little bit. In other words, only making $33.36, whereas all we had to do was ignore the AI signal Never really tempted the stop loss area, which was way down here. Pretty much above the entry line the whole time, but as we all know, Holley's not the best at exits. It's those statistically weighted entries that are really her strong suit. So all we had to do is ignore that conservative exit reason and stay in the trade. It wasn't that hard to stay in. And into the close could have yielded $131 versus 30 some odd dollars. So a little bit better than what forex there, depending on conservative profit and moderate. And that is about all the spread that we had today. As we can see here, none of the numbers over here in moderate are larger than what we had in, well, this one is technically, but by 18 cents. So we're just going to call that a scratch. What else did we have today from Holley? We had an add-on opportunity in ODT. So typically like to talk about conservative moderate spread, add-on opportunities, and then any applicable trade arounds that might have been out there. We did have the beginning of a trade around. Let's see here, where was that stop? On AFL, just never could get going here. Looked pretty good here. Notice how the stock operated or reacted around the stop area. It did act more or less as a pivot line, a little support level. It's just that, you know, even if you observed these bars, you made an entry here, here, or even over here, you just didn't have a lot of oomph in it. You know, we're talking about, you know, 50.50 up to 50.79. So it looked like it was going to work. It just didn't get a lot. 29 cents was the max. Typically, the good ones are going to make it back up to the entry level. And then sometimes they're even going to go do what they were supposed to do past that entry level. But this one had the beginnings, the makings, just didn't have the fuel to kick out a decent return other than about 20 some odd cents at the high from the stop area. So not a whole lot of good trade arounds out there either. Lastly, one good ad opportunity. We were all kind of laughing about this one today. Man, if you went home along ODT, you weren't very happy when you woke up this morning. So on this little guy right here, really gonna have to stretch it out. Maybe we can see. There we go. Okay. So original short signal here coming from ODT, keeping in mind we did have this massive gap down from the $18 level. I think we closed at 19 3 cents on Friday. big gap down. And then Holley, not wasting any time here, calling that short about 10 minutes into the open. And then, you know, a little sideways action for about an hour, slowly but surely starts to grind down here. All right. So now that we have these bars enlarged, we can see, put in the initial low right there, tap through it right here, took about 30 more minutes before we got another break, but it did, you know, cave in pretty nicely here. So somewhere in this area right here would have been a great add-on opportunity, even an original entry. If you were in it, a great place to add. If you weren't in it, a great place to make an entry. So at this, what level was that? About 449 would have been a great place to do that. And we got all the way down to about 381. So considering the small price, not a bad percentage move on the add-on opportunity here as the simple opening range break occurs on ODT, and the short was way back here. Other than that, that's about it for Holley today. 5 trades, some decent gains, one add-on opportunity, little moderate versus conservative spread here, and a failed trade around. I can't say failed, but 20 cents, nothing to write home about there. Now, I haven't even looked to see what this one's doing post-market. Let's take a look here. Pretty much the same. These drug stocks are notorious for doing exactly this, which is why I typically try to shy away from the biotechs as far as swing trading goes. You know, on the other side of the coin, yeah, you can get the other side of that move. You know, you could have been short this stock, or you could have been long and had a huge gap up, but that is the nature of the biotechs. Yeah, Mike. So no, let's take a look at that real quick. Jam down to the 10. Yeah. A little jam down there to the 10. We'll have to see what that one does tomorrow, see if it can maintain that level there. All right, so that's pretty much it for the Holley recap here. Moving right along. Now, we've started to see stocks make an appearance that, you know, in the same vein as Steve and I were discussing, market's getting a little trickier up here. The patterns that we're working, some of them are working, but it's got to flip a coin depending on, you know, which one's going to follow through, which one's not, even if it's from the retail sector. You have one retail stock follow through fantastically. You'll have another one not follow through. Same market cap, same good earnings, whatever. It's just getting a little bit more difficult. But what we've started noticing are some of these high flyers. Now, of course, everybody's probably going to be familiar with one that started a while back, TCAT, okay? Flat as a board for how many ever weeks, months, days. Starts to get a little perky, and then boom, 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 all of a sudden we go from $3 up to 50 and change, okay? Now, the price action isn't really the thing that we're going to be talking about today, although the price action on that is pretty phenomenal. But it's when we have these big days, and then we have a little bitty kind of consolidation or inside day there, followed by another big up day once that prior high is breached, okay? So we had that pattern here in TCAT. We had a big up day. Let me just mark this up just in case anybody's having trouble seeing my screen. Big up day, little inside day. Notice when that level is breached, if we're watching for that, we got a huge push on that day. Then we have a little down day, then we get that inside day again, then we have another big up day, all right? So what got me thinking about this, well, this one came along, you know, last week, but we're starting to see more of them show up. So this morning, looking at one of my tried and true windows, keeping an eye for the 30-minute and hour opening range breakouts, looking at my new T-high window here, which has been up here forever. Some of you are probably already familiar with it. Maybe some of you are not, but after today, you will be. So let's just, I'll tell you what. What we're going to be talking about is JFIN today, because it was a great example. Now, if I'm just going to duplicate this window. We're just going to point it to JFIN just so I can scroll through easily. And then we'll just take a peek at the history. And we're going to put this on 5 minutes. Okay, so now we have all the occurrences of JFIN today. Now, we'll just scroll on back here. Okay, so now we've got, it would help if I actually clicked on JFIN, huh? Okay, notice what we have in the daily. We had a big old day on Thursday, worked out up here, and then what did we have on Friday? We had the little inside bar. Remember what we just saw on TCAT. Big day, inside bar, another big day. So we got the same thing occurring in JFIN today. Now, I saw it come across where, well, actually I missed this one and I've been pulling my hair out all day because of it, but look how beautiful of a setup this was on the 5-minute opening. 1, 2, 3, 4. So a little after 30 minutes, we get this very nice controlled range break. And this was a huge move. I mean, this thing just took off and went, okay? But if we were focusing on that prior day, on the breach of that day, I mean, obviously it would have been nice to get it here on the simple opening range break. It would have been trade of the day, trade of the week, trade of the month. Nice move, but how do we monitor for these types of patterns here? Okay, that's what I started thinking about earlier today. I'm like, okay, you missed this beautiful range break, but notice it's exhibiting some of the patterns that we've seen in TCAT. Handful of other stocks are doing this as well. TCAT was more associated with the non-fungible token craze that's hitting the markets right now. Seems like we've got a new one every month. It was the SPACs. Now it's the NFTs and the exchanges that trade in those things. But nonetheless, all we need to do here is focus on the pattern. So I started thinking to myself, okay, well, let's make a top list and let's put some simple filtering in place, which this is about as simple as you can get. I got a minimum of $3. I got a maximum of 60. I got a maximum of 30 million shares in the float. And that's pretty much all that I have for filtering. And then all we have to do is install change in previous day and check out the values. Now notice JFIN showing up here. That was down 12.6 on this little inside day here. All right. So keep in mind, this is going to show up right on today's open. It's going to be like, hey, this thing was down 12.6 today. So you pull it up. If it's exhibiting this pattern, well, then you've got an area of interest to pay attention to here. All right. So if we were watching JFIN this morning and we would have paid attention to this and we see, okay, if it breaks that high from Friday, it might be worth taking a stab. Now, of course, you wouldn't have got it down here because the high from, I'll tell you what, let's go back to 15s for this. Making me go cross-eyed here. Let me get rid of the post-market. Okay. Okay, so you wouldn't have got it down here at the opening range break. You would have had to wait till it got above the high over here, but still a very nice move nonetheless. Now, what I've done also is I've put together an alert window, which we'll get to in a minute, which would have alerted you to JFIN and a couple of other ones today. But if we just start looking through this list here, okay, W key, some of the boys were talking about this one today. Now this one, same thing. We had the big up day on Thursday. We got the inside day on Friday, and this one, tried to get started today. Okay, got above it briefly. But, just keep in mind, you can see this right off of the open. You don't have to wait very long to be notified of these things. Hey, this thing was down this much the prior day. So there's lots of different ways to try to play the entry here, whether you're waiting for the break of the prior day, which was way up here, or maybe this is just on your list to watch and you're thinking to yourself, okay, took a nice little turn down on the open and then seemed to firm up, so maybe I'll go ahead and take a stab at it right here and see if it can hold, right? Use the low of the day. Maybe we also consult over here. Is it down to the, oops, is it down to the candle body, top of the candle body, or, maybe sometimes that prior day will be a good area to pay attention to. But the bottom line is this one's off to a slower start, but still represented some pretty good intraday upside. So, if you could have played it down here, got a nice fill somewhere in here, used the low of the day as your out, could have been a nice scalp, or you could be nice and in the money, willing to take a little bit of overnight risk there. So of course, JFIN showed up here. All right, notice it never breached that prior low, but we're gonna have a nice little assortment of stocks to pay attention to here. So news, see something like this, not so conducive. This is what we're looking for here. Big up day followed by inside day, and then watch the following day for some more upside. So JFIN was a perfect fit. W key was a good fit. Let's take a look at some other ones. Nah, not really what I'm looking for here. All right. Decent up day, or excuse me, down day. Not really the pattern that we're looking for here. So it should stand out pretty well, okay? Now, what about the other ways, okay? If we're seeing a down day for these guys and keying off of that prior big day, what if we flip it? And I don't know why I'm getting green in here. Maybe we can do it the other way too, because notice AE had the big up day, but today we're forming the red inside day. So you can go ahead and get a little bit of a jump on these and go, okay, Friday we had the big up day, but we had a red day today. So we got the inside bar, so you can get a little bit of a jump on these by sorting them the other way. Pattern's not intact there. Not there either. So some of these will be conducive, some will not, some will look like this. You're like, okay, the big day playing right in line with what we saw here, okay? You got to have the red day in there in between the, well, green bar, red bar, and then potentially if they're going to go retrace and go back up, you got to have that red day in the middle. So predominantly focusing on these values on the open, but I can tell you this, AE will be on my list to watch tomorrow because I can already see it had the big day. We had the down day today, so it'll be on my radar to watch for tomorrow, and the possibility that it might come up here and crack that, keep on going. Typically, these are going to have pretty decent relative volume with them, even though there's no relative volume requirements in the scan itself, but check out all these relative volume numbers up here. I don't see any that are anywhere close to 1, and that just seems to be the nature of the beast for these types of plays. Okay, so this is a good way to get a bead on the ones that may be forming that pattern right on the open. And I've put together an alert window as well. Let me see what I did with it here. Get this guy off here. Okay, big ups and downs prior day for the top list, big ups and downs prior day for the alert list. Let's take a peek here. A little bit more filtering on this one. So if we want the big move up or down, what I've done, put change in the previous day, either had to go up or down 10%. And to make sure that we're not catching it too late, position in previous day's range has to be above it, but no more than 2% beyond it. A little volume requirement in here, had to trade 100,000 shares on the day. I don't think we're gonna have any problems with the relative volumes that have been in place. Also have relative volume with a minimum of 4. And over here, got a max float of 40 million shares. So feel free to, play around with these settings. This is just the way that I dialed it in. And what I like about this window is it's spitting out very few alerts, okay? So let's take a peek at what it showed us today. Okay, so what do we have here? 1, 2, 3, 4, and this one didn't come in until much. This one came in about 2 minutes before the close, but for most of the day, it was just 3 stocks, okay? So we had AESE, which doesn't really fit the pattern over here, but I don't really expect it to. Didn't work out, all right? Then we got HOFV. Not really fitting the pattern over here, but that's not the concern. It's just, look at this as a supplementation to this window, all right? Still worked, okay? So it's having to breach the high of the prior day is really the key factor in this alert window. So HOFV getting a nice little alert there at 456, and I think we topped out around 592, so not a bad alert on that. And then we had JFIN, all right? So notice we're getting the alert a little bit later than we would have from the opening range break. We're paying attention to it on the open, but still not a bad gain nonetheless. Getting in at 917, what JFIN top out at today, just shy of 15 bucks, 14.95. And lastly, FHTX, let me know where that one came in. Let's see, about 2 minutes to the close at 1680 and closed at 1690. Let's see what the, see if it's doing anything in the post. Not doing a whole lot there in the post, but for most of the day, there were only 3 alerts coming through here: AESE, HOFV, and JFIN. So for most of the day, this thing was batting 2 out of 3. And typically, I would assume that this is going to be market directional oriented. In other words, if the market's coming down, probably don't expect this to perform 2 out of 3 like it did today. I was playing around with the back test, and it did seem to be kind of, dependent on market direction for the day, but should act as a nice little addendum to the top list here. But because, we're folding in a few extra things here. We're not going to be seeing the exact pattern that we're trying to find with the top list, but some of the stocks are going to carry over and could still be decent intraday scalps and potentially good swing trade candidates as well. All right, let's see here. Yep, TCAT, OCG, yep, same vein there, George. You know, Stan, that's a great quick question, and the question was, could that scan be modified for a previous day doji, which is in the upper third of the previous day range? So what I did earlier in the day is I was pointing to the doji lists from our dailies and wasn't getting anything, okay? So great minds think alike there, George. I was thinking the same thing. So to try to figure that out, and I'm still gonna test that theory out by starting with just the doji alerts and then trying to mold some filters around that. But when I just took this list and I pointed it to the dojis, you know, and there's several different dojis, the long-legged doji and whatever, I didn't get any hits whatsoever. But I see what you're saying there. All right, so I'm gonna go get these put back in real time. All right, live during market hours. This one's in real time. All right, I'm gonna go ahead and share these out real quick here. All right, so there's the top list and the alert window as well. All right, so now you have the alert window and the top list in the chat panel. So remember, as soon as that bell starts ticking tomorrow on the open, you're just gonna start looking for these guys and looking for the inside day here, okay? Big green day, inside day, and then watch for your preferred area of interest. You know, if you get these stocks on your radar early, you know, then very possible that you could stumble into a JFIN today that was just absolutely gorgeous. Or, you know, the alert window was a little bit later, but still produced some decent gains. So what I like about this top list, along with the alert window, is it's very simple, all right? We're just looking at the ones that had big down days tomorrow, see if there was a large green day on the prior day before, and then watching for that high to be broken. Any chance that we will have alerts that go to phone text? Well, George, that is it is possible to get alerts delivered via SMS. You have to go to our website, log into your account. Depending on your carrier, sometimes they're timely, sometimes they're not so timely, but you never know until you get in there and kind of play around with it and figure it out. All right, Steve, anything I need to back up on there?
Nope, we're good.
All right, and yes, James, they have been posted to the chat window. So looks like we're running up to the top of the hour. So that's about all the content that I have for today. So it'll be interesting to see how this list performs moving through the rest of the week. And as always, want to thank you guys for popping in. We know your time is valuable. So Scott, if you're ready for the walkout here, and let everybody know how they can save a little bit of cash on a new sub.
Yeah,
or
thank you, Jamie
an
and
upgrade.
Steve. Yeah, thank you guys. So on the way out, a couple reminders, grab that ebook on earnings, tradeIdeas.com/earnings. There's even some cloud links in there for you to add to your layouts. We got a Trade Ideas podcast, some good episodes to check out. Subscribe so you're ready for the next one as soon as we release that. Just search for Trade Ideas podcast wherever you listen to your pods and add us as a subscription. There's a code, opportunity, saves you 15% off your first month or year of Trade Ideas. Great way to upgrade or start a subscription with us today. You can follow Jamie on Twitter at QuantBot. You can find Steve at TISteveG. Trade Ideas Pro is the Facebook handle to like and share with your friends. And info@tradeideas.com is the best place to send any of your questions. It goes into our help desk software and gets you the support you need. Thank you, Jamie and Steve and friends. The recording will be up later on tonight or tomorrow. You get an email reminder tomorrow about how to find it. Thanks.
Thanks, everybody. We'll see you tomorrow.